Hello friends, welcome back to my channel. So I had made a video on IDFC First Bank just maybe some 7 months back. I have also mentioned 10 reasons why it can re-rate. And I also mentioned that don't sell single share like that. I think that time when I had made the video, the price was almost like 63 or something. If you can see now, I think the price has come back to almost like it was actually down till 52, and it has actually come back till I think 85 level now. So why I'm making this video, actually still this is not fully rightly valued, because the book value of this bank is 54. At least it should show, it should be trading at 2 times book value. That means 105 or 108 is the right price. So I think today there is also one news came up. I think whatever I was mentioning, Nomura, this is the company, this is a brokerage house. So they've given a buy call today on the IDFC First Bank. That's why I think the volume and other things also increased. So they have given a actually target for 105. As you can see here, 105 is the target what they've given. So there it is almost like from it is 23.5% from the current price. So as Mr. Vaidyanathan sir always telling, the loan book is always grow at 20%. If you see the big banks, so HDFC and all, their loan book is already I think more than 25 lakh crores or something, SBI and all. So if they want to even grow 10%, then it is actually they need to grow in quarter 2.5 lakh crores they have to grow. That is actually impossible. That's why these kind of small cap banks, small companies, small banks can grow easily at 20%. Even if you see, I had also made a video on this City Union Bank and all. Their loan book is very less. I think they can easily grow. So currently IDFC First Bank loan book is almost like 2.5 lakh crores. So I think Nomura also saying that I think easily they can grow 20%. And also deposits. I think everybody is struggling to get the CASA, that means current account and savings account money, which is lying in the savings bank account. I think where the banks will pay very less money, like 3%, 4% and all. So this IDFC First Bank has actually got a CASA of 50%. That is another advantage. And also Nomura is saying they can easily grow at 22%. So this is the one good news. In terms of loan book deposits, they're really good. Where they're struggling is the cost to income ratio was actually very high. It is almost like 71% or something. If you compare SBI, HDFC, Kotak Mahindra Bank and all, their I think cost to income ratio is less than 50%. Of course, there are multiple reasons for that. So first reason is actually they wanted to bring their CASA ratio high, because when the merger happened with Capital First in 2018, I think their CASA ratio was I think 10%, 20% or something. That too, there were only wholesale deposits were there. So now I think it is purely kind of a retail deposits which are sticky. I think once they put the money, they don't care to withdraw or something like that. That's why it is a safe CASA ratio, retail CASA. And also loan book also they have made it as all the infrastructure and other things, they have actually got rid of that loans. Now it is actually fully focused on retail loan book. So it is almost like 80-85% is almost like retail loan book now. And they are also ventured into other businesses within for 7 years of merger, including this this credit card business, wealth management business, of course anyway this toll they will pay, right? Fast tag business and all, they are really growing good there. So all this, they are setting up the branches and other things. That's why the cost was high. So as Mr. Vaidyanathan was also saying last time, even the loan book has grown 20%. I think last quarter the cost was only actually grown by 13%. So you can see here they are also saying, I think because of all this cost reduction as well as the leverage, this leverage whatever was there is coming into picture. So the ROA and ROE is going to improve by financial year 28. So they're going to they also given here 5.4, and this earnings acceleration, this is very important. They are saying EPS CAGR. is going to increase by 67%. I think this is where the Nomura is very much confident because of this cost cuttings, and they also stop not expanding the branches at a very high pace what they are doing it earlier. Now they will open very less branches per quarter. Because of that also the cost will reduce, and they also taken a lot of initiative to reduce the cost, and also they are reducing the savings bank account interest rate whatever they were paying earlier. Now they are also becoming like a other banks as well. They will pay very less to this interest rate. Because of all these things, the cost will come under picture. As I said, I think the operating expenses also, which was actually for setting up the branches, manpower, technology, and multiple. If you see the app, I think all over India, this is one of the very good app, I think, which has got very good ranking, as well as also it has got good global recognition, I think. So this operating leverage is now will come. That's what they're saying, Nomura is saying. So because of all these things, you can think of, if it is 10 rupees the currently it's only 4 rupees or something, it is going to increase by 67% every year. That means if it is 4 rupees now, you can think of in by 2028 how much it will become. Maybe it should easily go to 8 9 rupees. 9 into multiply even by 20%, 20 PE, I think it should go to 180. I think this is too optimistic. Other thing also, if you can compare the loan book, I think they've got 2.5 lakh crores loan book. If you see Kotak Mahindra Bank has got I think 4.4 lakh crores as a loan book. So it is already trading at a market cap of 5 lakh. So IDFC First Bank's market cap is still 72 crores, 72,000 crores. So their loan book is 2.5 lakh crores. That means the market will definitely re-rate, even not more than the loan book, at least at par with the loan book. So even if it is going to 2.5 lakh crores, so you can think of now it is 70, it should become 3 bagger actually. 72,000 into 3, if you multiply, it'll come to almost like 2.1 lakh crores. So that means I think easily it has to become 3 bagger. That is the right valuation actually. So of course all this, once they start flowing up, then I think if you see 3 times current from the current book value, the price is also 80, 85. The price should become 250 or something. I think that's what it's coming to, if they get at least the at par with the current loan book, as they are also going at 20% each year. So you can think of, then the loan book also will increase easily. They will also reach in catch up to 4 lakh crores or 3 lakh crores or 4 lakh crores easily in, I think, in a couple of years. So NIM also, I think because of the RBI rate cuts, there was some pressure in last 2 quarters. I think this quarter also RBI has reduced the rate. It may take some time, but however, I think it will bottom out in the by next quarter. The current quarter of financial year 26, it should bottom out. So from that onwards, I think the net interest margin, I think currently it's 5.8 or something. This should also get increased, I think, from next year onwards. So the asset quality wise, I think Mr. Vaidyanathan also accepted that the MFI pain was there. He did not insure that with the government authorities. Because of that, he burnt his finger. That's why I think the profitability, even though it was going good last year and all, so this year it had taken a hit because of one of the reason is also MFI pain. A lot of end consumers, these groups and all, taken loans from multiple companies and they did not pay up. That's why there were a lot of NPAs and all were there in MFI industry. Pain was there. Currently, even if you see the Ujjivan Finance Bank numbers which they have posted, I think pre-provisional numbers, pre-quarter result the numbers. So the MFI loan book is already started growing, since I think IDFC First Bank is also in that business. So they are also going to insure from now onwards, I think, and also it has got very good high margin. I think more than 20-25% margin is there. Even though the CASA ratio is at 3%, 4%, I think even the cost of funds is almost like 5.8 7% or something for IDFC First Bank. If they are lending it almost like 20% also, you can think of how much they will earn. 13% income they will make. That also will another advantage. I think they will increase the profitability. So they will start lending now onwards from MFI industry also, by even insuring the loan books. So that will also can protect the any NPAs and other things. So as I said, I think just to conclude, I think 54 is the book value. So 54 into 2 times also it should get. If you see the competitors, for example, let me quickly go here. You can see the other branch, other companies, HDFC and all these banks. So they are actually trading at, you can see here, almost all the companies are trading at 2.73, 2.54, like that, the big banks. So the IDFC First Bank also considering the loan book, they're also going to become a big bank now. At least they should get a 2 times book value. If that is the case, I think 105, 108 is the right price. I think Nomura also has given comeback and saying that it's going to trade at 105. They've given the target, so I would definitely say I think this is the correct recommendation. Apart from this, technically also this is looking good. As you can see, this is actually bullish moving averages. This is actually more than all the averages. 20-day moving average is 84, 26-day moving average 83, and 50 days 81, 100 days 78. So this is trading above all the moving averages, and even the bullish indicator is there actually. So if you see today's volume is also because of this Nomura ratings, so the volume was really good. So out of that, even the delivery percentage is 65%. If you see this weekly, it was having a delivery percentage of 58. That means if 100 shares are bought, 58% have taken a delivery instead of intraday trading and other things will come here. So combined delivery is very good, volume is there today. Hopefully I think it should also start picking up from here. I think there is also good resistance here, but there is also good support here at 83.6. I think this is a very good level. It should act like a support. If you see from last 3 days, the market is continuously falling down. So I think now if the market tomorrow, if it going to be positive, I think IDFC First Bank should start going up. Of course, because of the huge volume of equity, that is one of the bad thing. I think when the merger happened, I think number of shares was 400 crores. I think Mr. Vaidyanathan sir has, I didn't diluted too much. I think they raised almost like 10,000 crores, and they diluted too many shares. And now it is 850 crores of shares. That is too much. Even for earning 1 rupee, they have to earn 850 crores. This is one of the negative. I don't like it. Because of that also, I think the one or the other level people will be selling it. There will always be a seller. That's why you cannot expect like a upper circuit and all. I think it's kind of a slow moving stock, but like a tortoise, slow and steady moves the race, like that, I think. But I don't like it because too much of equity has been diluted. But however, I think if you see 1 year also, I think from 54 levels, this has corrected. This has moved up very nicely. So easily, if you're holding the stock, I would recommend you to hold it. I think show some patience at least till financial year 28. So if the whatever the management was saying from so many years, they have also learned the lesson by burning their fingers in MFI business. Now onwards, they're also insuring. Hopefully, I think this now onwards it should start recovering up. If it comes up as well, don't sell it easily. At least hold patience to have the patience till March 2029. Yeah, 2000. Financial year 28.